Off straight away with declarations of interest. Are there any declarations of interest? There are none. I have no urgent items, and we'll move on to item 3 on the agenda, annual audit letter, which is at the moment in progress. You haven't got the papers as far as that is concerned, on the grounds that there are 1 or 2 pieces still outstanding that don't enable us to sign that off. Can I just ask Geraldine to explain that, please? So
the annual audit letter is a statutory document that's issued by auditors at the end of an audit, and this is in relation to your 15-16 audit, which still hasn't been signed off. Because the annual governance statement needs to come back to you following your meeting in January and your request, rightly so as members, to make some amendments to that 15-16 annual governance statement. So when that's completed, Chair, that's when the 15-16 accounts can be signed. So the audit has finished. It finished a while ago. So it's just in terms of practicalities. Then you will be given your annual audit letter to finally close that year off.
Okay, thank you. Any questions? Right, moving on. Item 4, statement of accounts. Andy, if you would, please.
Thank you, Chair. So this is the statement of accounts for 2016-17. As you've just heard from Geraldine, 15-16 is just as a formality in terms of getting finally certified. So 16-17 is now here with you today in terms of the statements, the financial statements. And obviously previously we've gone through training with you informally. I hope you found that useful in terms of the statements. This, as you will no doubt know, that this is very much a technical document, how much is penetrable and understanding from yourselves and indeed the members of the public as well. But I hope in that training session we've taken you through the key points. I think for me today, what is critical is that your external auditor, Geraldine, is here, and what's attached is the audit findings report from the external auditor. It's all very well me telling you every council meeting that things are progressing, the finances are getting on track. What this does is give you an independent of me and indeed every other officer opinion of the council's financial position in line with the code. So we have spent a lot of our time and focus in terms of the resources available to us in ensuring that the statement of accounts were compliant to the accounting code. I would hope and I believe that we have improved on the 15-16 position. 15-16, I probably don't need to remind you, we were issued with a letter from the external auditor around section 24 recommendations. I won't steal Geraldine's thunder because clearly that is features as part of her audit findings report in terms of the progress that we were charged as a council to make to our control environment and indeed our accounts, improvement in our general accounts as well as our general financial position. So that's contained in the audit findings. Just quickly on the annual governance statement. The annual governance statement is due to come to the next council meeting. So we're asking you to approve the accounts subject to the annual governance statement coming to that meeting. And you'll also notice that the going concern statement, which went to the scrutiny meeting, is also attached as well, and that gives you my opinion of whether the council is a going concern or not. And also critically for me, it was more of a chance to update you on our progress against the section 24 recommendations that were contained in the 15-16 accounts. Just very quickly on the covering report before I hand over to Geraldine, is that the change from the draft statements that were sent through are detailed on page 3, the table in page 3. So previously we were talking around an overspend of 585,000 in the financial year 16-17 with a closing balance of just over £1 million on the general fund reserve. Some of the changes that we've had to put through because of the result of the audit, which are detailed in page 3, means that that position has changed slightly in terms of a slightly increased overspend and a slightly lower general fund balance of 999,000. And those adjustments primarily are due to how we have treated and dealt with grants in the accounts. And no doubt Geraldine will have something to say in terms of our control environment on grants, and it's something I know that we do have to improve on, along with many other things that we're still trying to improve as well. So at that point I'll hand over to Geraldine to take you through the audit findings report.
Thank you everybody. And apologies that I wasn't able to get out to do this report for you before Christmas, but weather didn't allow us at Land's End to get on the plane. So as Andy has just described to you, this is our document that we present to those charged with governance, i.e. yourselves here today, at the closure of our accounts audit for 16-17 financial year. I think what I'll say up front will probably be a common theme throughout the report. So rather than repeat it on every single page, I think I'll just give my thoughts to you up front before I go into the detail. I think it's fair to say, as we know, and we won't keep rehearsing it, that 15-16 was a very difficult year, not only for the audit but for the council. And I guess from my own perspective, and I know from the firm's perspective, it has been a very positive reaction to our Section 24 report. Those Section 24 reports aren't issued easily. They're not certainly something that auditors do on a regular basis. However, when we do feel that it is necessary to issue recommendations that are formal to councils, we will do so. And I think following that issue, or the issue of that Section 24 letter, my perspective is that the council has reacted very positively to that, has taken the recommendations extremely seriously, and has now started to introduce processes and systems to move you forward in what I believe to be a positive direction. I think there are still some difficult times ahead, which is why we've mentioned some of the financial constraints and the medium-term financial planning issues in our value for money conclusion, which is why that value for money conclusion is still a qualified conclusion for 16-17 as it was in 15-16. However, what I will say is the composition of the final accounts or the financial statements that were sent to audit for draft stage were much improved. The audit was still a very detailed audit, and I'll explain why, because of certain thresholds that we applied to our testing. It was a very detailed audit. There are some changes to your accounts, and as Andy has just mentioned, one of them does impact on your bottom line, and that has been put through. And also, I think it's fair to say we've had a lot of cooperation from officers, finance officers, the chief executive, and lead members as well. So I guess from my perspective, I'd like to thank the council, all of you, for taking those recommendations seriously and starting to move the council into a positive direction. At the time of writing this in the middle of December, the audit was substantially finished, and on page 11 I've outlined to you some of the matters that were still outstanding that meant that we couldn't issue our opinion. So some of those matters are still outstanding, and I just need to update you on the progress of those outstanding matters. It's under the introduction paragraph. So the first bullet point, we have reviewed the final version of the financial statements, and they are the final version in front of you today for approval. We will obtain the management letter of representation. It's a signed letter from the council to say that there is nothing else that we need to know about as auditors, and we will normally get that when the accounts are signed. It's best to do that on the same day because any timing issues then need to be revisited again. So we will do that when we sign the accounts. The annual governance statement is still in draft and does need to be presented to you, as your Section 151 officer has just explained. That is a very important document, and it's an important document more so for the Isles of Scilly, given the changes and the improvements that you've made throughout the year. That has to be supported by what we call the Head of Internal Audit opinion, and to date we're still waiting for that opinion, and that needs to be included in your Section 151 officer's governance statement. So hopefully you will have all that for the next council meeting when the accounts can be signed. We will then update our post-balance sheet events review. So as at the 31st of March, that's your balance sheet date. Obviously time has moved on, we're now in January, so we take a look at all the months and the changes that have taken place across the council in those intervening months to then make a decision on whether there is anything that would impact on the accounts when we sign them. And as of today, I don't believe that there is anything, but we will update that in the next couple of weeks. All those items in terms of supporting our testing that we were waiting for have now been received, so I can confidently say that our testing on all your balances has been concluded. And we are now waiting for solicitors' letters. So as auditors, we write directly to your solicitors that the council uses throughout the year to ask them, and not just management, but to ask your solicitors if there is anything that we need to know about in terms of outstanding litigation that could have a potential effect on your balances as at the 31st of March 2017. So we are still waiting for, I think, about 3 letters from your solicitors to confirm to me that the litigation that may be ongoing wouldn't impact, for instance, on the accounts. So I'm happy to take any questions in terms of the process, outstanding matters, before I then go on to some of the detail.
I'd just like to kick it off, Geraldine, if you wouldn't mind. As far as the issuance of the Section 24 letter was concerned, and I take on board what you've just said about that, can you give us assurance that the general drift of direction that we are already on is making sufficient progress so that we won't get another Section 24 letter issued?
Okay. Can I ask members to turn to page 43, please? So page 43 outlines the progress against the formal Section 24 recommendations that we issued on the 27th of January last year. And in the normal course of our work, particularly around your value for money conclusion work, we revisit the updates in terms of the progress made against those recommendations. And you will see we've categorised them in green, amber and red. For instance, if red was there, it would mean you haven't made any improvements at all. So you can see, hopefully, visually, that there has been some improvement in terms of introducing a review of the general fund reserves, which is something that both us and LGA had recommended, and a 12-month rolling cash flow forecast, which wasn't present in the previous year. We've rated some of the other items as amber, which mean that we believe things have started to progress. So, for instance, introducing new budgetary control procedures, looking at the medium-term financial plan, and I'll come on to that in a little bit more detail, and improving the capacity and skills of the finance team. And I guess within all that is obviously the transition over to a new financial system, which I know is well underway. So we have said in our report that actually you are moving in the right direction. If you weren't, there'd be some reds in there, and I'd be reporting that obviously to you. Having said that, I don't think we're out of the woods just yet, and that's why I've alluded to that fact in the value for money conclusion, to talk about things like improving medium-term financial planning and to improve, for instance, the supporting information around savings plans that underpin some of those assumptions that are in your medium-term financial plan. So given the improvements made, I think it's probably another 2 years before we can see those processes and policies and procedures being fully embedded across the council. And I guess that's to be expected. But I think you can take assurance from me, based on our work in 16-17, that you are moving in the right direction. In terms of issuing another Section 24, Chair, I'm not in a position to say today whether that will never happen again. What will happen is that we will obviously continue to monitor your progress against those recommendations very carefully. And should we feel that things haven't improved, or indeed something else arises that we are not aware of that would warrant something like a formal recommendation, then obviously we will discuss that with you. But as of today, I can't see anything that I'm aware of that would warrant another issuing of a Section 24 as yet.
Okay, thank you very much for that. Vice Chair?
Thank you very much. I'd like to add my thanks for all the work and help that we've had both from the external auditor and from the 151 officer. And I think to hear that the direction of travel is pleasing to you, it is very pleasing to me, and I'm sure all of my colleagues and the officers as well. But I think what you're telling us is that we did start from a very low base. You did have a lot of concerns. And while we have begun to move in the right direction, you wouldn't like us to take our foot off the pedal, which is absolutely, I think, what everybody feels. And the fact that you're going to carefully monitor the progress and report back is, I think, good. Yes, members would like more information. We fully understand why Mr Brown hasn't been able to give us regular budget monitoring and the level of monitoring of the savings that we would have liked before we move into the next stage of deciding on the budgets. We understand why we're in that difficult position, but quite frankly, we hope that that will improve in the next year. May I just clarify one thing within the value for money report, which is that it does make reference on page 33 to the situation with the school. And I think possibly we could ask Ms Khan to give us an update on that, because we have had a good report now, and I think that the concern in that area is somewhat softened. And it might be helpful perhaps if we had a short report on that.
Yeah, I sent quite a lot of information through to you and your colleagues, Grant Thornton. Ofsted Inspection of Children's Services, actually, it then goes on to talk about the Five Island School. The Ofsted Inspection of Children's Services, actually, the local authority got good in every category, and is one of the highest performing authorities in the South West. The school itself got inadequate, and so the local authority put in significant school improvement work, and I've sent the updated monitoring report, which praises the work of the local authority. I think we're not also reflecting things like the good from Ofsted for lifelong learning and the good from CQC from Park House, and I just would like some more amplification in terms of a value for money local authority. I think actually the delivery of services has been, considered good. So I think there's it's misleading, because that is not reflecting the Ofsted Inspection of Children's Services, which is an LA inspection, not a school inspection. So I'll send through the information again so we could just better reflect that. It's really, really important, because sometimes we have to be pleased with ourselves,
Are there any more questions at this stage? No? Would you like to carry on, Geraldine?
Are we going to be in the AGS and more? Thank you so much.
So, can I ask you to tell us page 12? There were a number of disclosure adjustments within your accounts, which are detailed later on in the report, which I won't go into detail on because they aren't significant in terms of changing the bottom line. But I will draw your attention to the adjustment that took place of 124,000, which meant that your bottom line did change, and that was because there was a misclassification of a grant. We did test grants substantially during the 16-17, given the amount of errors that we found in 15-16. And whilst I am saying that there has been improvements in that particular area, because I think last year we were talking about a lot more adjustments around sort of 400,000 mark rather than 124, there are still processes that need to be embedded in the grants and the way that they are classified and recorded on your systems, so that those simple errors really don't happen at the end of next year. And it probably is very much a thing to look for at the end of the year rather than during the year, when journals are processed and when people are thinking around how to classify grants. Obviously, the council rely very heavily on grants, and rightly so, so you do need to make sure that the classification is correct. And it's important to know whether you can use the grant for a specific reason, or indeed you don't need to specify how you will use that grant. As we know, the reserves have now decreased again, and they are around the £1 million mark. What we don't want to see, obviously, is considered decreasing over the next year or so to below a level that wouldn't be acceptable. So I think that's really the main error in terms of bringing that to the attention of those charged with governance yourselves. So over on the findings section of that page, page 12, you will see that we've highlighted that as a weakness in controls and made specific recommendations for grant classification to be improved. And also in terms of recording some liabilities. So this is where expenditure at year end may not be classified correctly. And again, I do believe that this is a year end process that needs to be enhanced to make sure that all the right expenditure is allocated to the correct year for the accounts. So in terms of value for money, that goes on to page 13. What I've tried to do is go back over 15, 16 and then give you some highlights of what's changed and what needs to change from 16, 17 onwards. So we identified the following areas that we wanted to concentrate more on in terms of our value for money. That was around the council's ability to be financially resilient. It was also to look at financial governance and in particular control. Working effectively with partners, particularly your inter-authority arrangement with Cornwall Council now, and leadership and capacity. So can I ask you to turn to page 35, which then goes into the detail on page 37 around those risks, what work we've done to address those particular areas, and our findings and conclusions. So in terms of financial resilience, we note the improvements made in terms of putting together a draft medium-term financial plan and the forecast outturn deficit. But what we have noted is that budget monitoring does need to continue to improve over the next year or so, that the council do need to watch very carefully the level of reserves, earmarked reserves, and indeed the general fund reserve, given that that is linked very closely to financial resilience. Over the page, in terms of financial governance and control, we note that there have been improvements in terms of information provided to members, but that obviously you do need to start to have some more detailed information that can be finally extracted from hopefully a new financial system that will be fit for purpose. Because obviously it's important to yourselves to know the state of play in terms of your finances so that you can make those informed decisions.
Geraldine, can I just ask a question just to elicit for members, please? The general fund reserve level, can you explain where that approved level comes from for members, please? Because it appears at times to be an ethereal number that we really don't necessarily hang our hat on.
Okay, I'll give you my thoughts and then perhaps your Section 151 officer can give him his ones as well. So years ago, central government used to dictate to local government councils how much they needed to have in their general fund reserve balance. But they don't dictate that level anymore. It's entirely up to yourselves as members when you go through the budget setting process every year to have that information in front of you and for you to decide whether you feel that your general fund reserve balance and the budget for that for the year end is adequate to ensure that the council can still exist and be resilient. So I think there's been a concerted effort to local decisions around that level. Having said that, we would as auditors look at that very carefully and make sure that, for instance, it is not eaten away by supporting any budget deficits. That's not entirely great practice, and therefore the recommendations are around making sure that as members and officers the council reviews those balances on a regular basis to make sure that you don't get to a point where you have very little in your general fund reserve.
Thank you for that. I just thought it was very important that we, as an authority, understand that it is actually our decision that we set that level. Is that? You want to speak, Andy?
So just to add a little bit more to the level. So I think historically this council has set a minimum level of £1 million for its general fund reserve balance. So as you can see, at the end of 15-16 we were talking about £500,000. 16-17 with the overspend, that was looking like we were going to go overdrawn effectively, and so that was a situation which was unacceptable. So during end of 16-17 and during 17-18 we've undertaken a review of reserves. Part of the Section 24 recommendations was to address that, and clearly we've moved money out of earmarked reserves that aren't going to be used for those purposes to bolster the general fund reserve back up to that level of £1 million. What's critical here, though, is my assessment of risk going forward, and therefore the level of reserves that I think are needed. So every year when we set the budget, I'll be doing an assessment of that risk and put a number to that in terms of where I think those risks potentially lie. So the £1 million is quite sizable as a percentage for this authority when you compare to other councils, but that's because the risks and the financial shocks to this council are significantly greater, and that's why the reserve balance is up at around the £1 million level. I'm more than happy to circulate the risk assessment that was made for setting the budget in 17-18, because I think that came out with a risk assessment that was slightly higher than £1 million. And what it does is it goes through and lists certain things of events that may or may not happen, and likelihood and uncertainty, and a financial assessment of that. So, for example, timely, any unforeseen weather events that causes any damage, how much that could be, the likelihood of that, and that all adds up to what your risk assessed level of general fund balances should be, and that's the indicator. If that suddenly changes and goes up, and I make an assessment in February, say when we set the budget to that, I think that's £2 million, that then suddenly becomes for me what your minimum level of general fund reserve should be. I haven't done that assessment yet, but that'll be part of the budget setting. As I say, I'm happy to circulate the assessment. It's out in the public domain that was part of the budget setting for 17-18.
Thank you.
So in terms of the value for money conclusion, as I confirmed at the beginning, and it's confirmed in our pages, page 38, that it's a qualified value for money conclusion on an adverse basis, which is the same as 15-16, which means that those bases are improvements needed in terms of financial resilience, improvements needed in terms of financial control and monitoring, governance arrangements in terms of information provided to members, and the medium-term financial plan being underpinned by some substantial savings plans that, you know, have detailed plans behind them to make sure that they are robust. So that's all I think I'll say on the value for money conclusion. If I can now go back to the financial statements, which is the things that you do need to approve today, and just recap on some of the work that we did and some of the key messages on those. Can I ask you to turn to page 15, please? And on page 15, as auditors, we are required to inform you on the level of what we set in for our materiality level. Now, materiality is what an auditor will call an acceptable level of errors. So it doesn't sound very positive, but it has to be set for every single audit. And that has been assessed for the Isles of Scilly as 1.3% of your gross revenue expenditure, which turns out to be £233,000. Anything over £11,000 has to be re-reported to you, because we class it as not being trivial, although it's not important enough for the accounts to be amended. So you just need to be aware of those levels in terms of your financial statements and our audit. And we audit to those levels. And I mentioned earlier the detail of the audit for 16-17. In terms of your comfort, we audit to those levels and below those levels, so at any one point in time you shouldn't find any errors in your accounts that are around the 150, 120 mark, which is why you made that amendment in terms of your grant. And that actually is quite a low figure for a lot of local authorities. It gives you, I believe, some significant confidence in terms of the audit testing on all your balances. On page 16, 17, 18 and 19, you may recall I presented the audit plan to you back in the autumn, identifying our audit risks for the Isles of Scilly, and some of these are inherent national risks as well. I won't go through all of these in particular detail, but suffice to say that we believe we've done sufficient work to address those risks. In the majority of cases, everything was fine. We didn't find any errors. We've mentioned revenue, we've mentioned your grants and the amendment there, so I won't go back over that again. And that is one particular area where we did find a change. But there are no particular issues in terms of errors or significant errors across all those other risk balances. Moving on then, in terms of your accounting policies and estimates and judgments, revenue recognition is related to the grants, that's on page 22. The judgments and estimates is around estimating future costs or costs within 16-17. And the item there that's highlighted is our weakness identified in identifying accruals at year end, i.e. money that you should owe at year end that may not fall into the correct year because of closed down procedures. And probably important for you, which your Section 151 officer did mention, is the going concern concept, and it's really, really important for the Isles of Scilly. In terms of going concern, you are a local authority. You do exist and will exist under the Local Government Act. But the going concern is more around, have you got enough cash and have you got enough cash flow, as you would do in a private business, to be sustainable over the next 12 months, and the 12 months is from January now to 2019. And so therefore what we did do was ask your Section 151 officer to consider the cash flow over every single month of the year to make sure that he was aware of any gaps that may need to be filled, or indeed would need to be filled in the short term or over the long term. So that's the cash flow statement that was provided to us and has been audited by us. The net asset position is obviously a healthy position, although we would never suggest you sell assets for revenue balances, but we've outlined there some of the comments and observations around your balances and moving forward over the next 12 months. So in principle, yes, the going concern does apply. However, we have highlighted there that the cash flow does need to be revisited on a monthly basis. And I know that you are talking about the need to perhaps borrow or short-term borrowing or long-term borrowing, and that is very much on our radar as well. Over the pages then, in terms of your adjustments, these are highlighted to you, from pages 29. Unadjusted misstatements, i.e. they are not material enough to be adjusted, are highlighted on page 30, and all the changes in terms of disclosure changes that run throughout your accounts are highlighted in the next 3 pages. So on that basis, we will be giving an unqualified opinion on your financial statements, which means they are materially correct now that those changes have been made. And so I'll stop there in terms of any questions you may have on the accounts audit.
Councillor Smith?
Just for clarification on page 31, number 3, the material loss of disposal of fixed assets of 833,000. Can you just explain that, please? Page 31 of page 25 in your report.
Yeah, so that's a disclosure point. So there was a loss on disposal of assets, which is in your figures, and that's around, I believe, valuation. However, in terms of the notes to the accounts, that figure didn't appear, so the notes have to enhance what's already in your balance sheet and your accounts. So that figure was put into your notes, so it wasn't an amendment that needed to go into your statements, it was already there. But the note had to be enhanced to explain to readers exactly what that was for.
Can you just explain exactly what it was, though, or Andy Brown?
Yeah, I'll have to get the...
Valuation.
It was as a result of the valuations that were done in terms of, but in respect of which fixed asset it was that it related to, I'll have to come back with the actual detail around
Yeah, thanks. Just a large figure that suddenly appeared. I wasn't sure what it was.
It's not actually a cash loss that we're talking about. It's a valuation. It's a revaluation of current assets that we actually own, rather than it actually being a material cash loss. Councillor Francis.
Thank you, Chairman. Could I ask, please, page 19? This doesn't seem to have been mentioned, but on the reconciliation of the payroll, there seems to be a discrepancy of 43,000, which is unexplained. Do we have any more information about that, please?
No, Councillor, we don't have any more information on that.
So I think this is one of those issues in terms of how far do you go and trying to reconcile it back and understand all of the issues relating to that. So we have to bear in mind and go and put ourselves back into what the actual control environment was for 16-17, which was weak and inadequate. And it's mentioned in the action, there are still reconciliations that aren't taking place regularly under the current system. This is one of those that coming into it towards the end of financial year 16-17 and picking up these reconciliations, we have not been able to understand why there is a difference from the general ledger to the payroll system of that 43,000. And so we've just had to hold our hands up in terms of saying there is an unreconcilable difference here that we haven't been able to explain.
Thank you.
Councillor Marcus.
Which leads me on to the next page and a couple of pages after that as well. This says about the finance team not having access to historic data, which is really quite concerning when there's a legal requirement for financial data to be kept for 7 years and to be accessible, which isn't great. And then on the page after that, where it goes on other accounting policies, where there's the only green box in the report. If the accounting policies are all good, then how come we're in such a mess?
If I deal with the accounting policies are sound. The adherence of those accounting policies and the application of those is the issues. So the control weaknesses that have been mentioned by Geraldine, particularly around grants and accruals at the year-end process, the accounting policies are quite clear. We should recognise those costs in our accounts. The issue is that the processes at close down is that we're not recognising all of those costs, and there's a myriad of reasons for that, and whether it be the system, the understanding of costs at the year end, what is still outstanding, what in terms of invoices at that point, at that stage of the balance sheet date. Those are the issues. So the accounting policies, therefore, are sound. It's the actual application and the operation of them. So, as I say, the accounting policy is quite right in saying we should accrue for costs incurred in that accounting period. The control weaknesses the auditor is highlighting is that we aren't.
Can I just add something?
Can I just before...
Just before you do, is that the one thing that I would emphasise is that this is a historical document. It's not the current situation.
I understand, but we're talking two things, aren't we? We're talking about where we were and now and where we're going.
Yeah.
This point in the meeting is about where we were.
Yeah.
So there has to be some recognition that at that time, and some responsibility by senior management and probably by members as well, that things weren't done great. So I'm just looking to get that from senior management and, to get that out there, because we can't just have this piece of paper here and say, right, we've learned the policies are great, but, so we have to take responsibility.
Yeah, agreed. Thank you. Agreed. Just for clarity, the comment around accounting policies, if we stripped it back, was have you got any? That's why you've got a green. By law, councils have to set accounting policies by the code, and they're there. you've got them in your financial statements. I think what we then go on to do is check adherence to it, which is what you find in terms of our recommendations. So it's probably not helpful in that we have a report saying, yes, you have got accounting policies, tick. Oh, but actually there are some that you might not abide by. So that, hopefully that just clarifies why that's there. However, there are some recommendations around adherence to certain things. And sorry, what was the first question? Apologies.
It was access to data, historic data. That is on your page 21, maybe? Changes to presentation on local authority financial statements.
Okay. So in terms of that, just a little bit of background in that Sit for Change presentation on local authority accounts, on particularly the profit and loss account, so that it would be more amenable to the public to understand. In order for that to happen, officers had to go away and readjust the previous year's figures, do a prior period adjustment. So it was quite a lengthy piece of work. So that caused some problems, given that 15-16 records and data weren't exactly usable in terms of their accuracy, and that's what we're alluding to. The data did exist, but as we know, given our reports, 15-16 wasn't exactly a great year in terms of records.
Right. Yep. Do you want to move on, Geraldine? Oh, sorry, I didn't see the light. Sorry, Councillor Smith.
Thanks. On page 12, you highlight an issue about an individual who had access to post journals. Firstly, what are post journals and what's the risk to the individual who still has access to those?
So, in every organisation, journals are posted to put the transactions into your ledger. So it's not a post journal, it's posting of a journal. So a journal is, just putting through those transactions to put into your ledger. So ideally, in an organisation, you would restrict access to be able to post journals because they affect the accounts to a few people. Sometimes that can't happen in a small organisation, so there has to be other controls put in place to make sure that spurious journals can't be posted putting money into various accounts, for instance, in the account statements, not accounts as in banks. So in part of our testing, we found that one particular person who had left the organisation was still down on the list to have access to posting journals. So what we did was make sure that we went back to check that that person hadn't done anything, and obviously they hadn't.
Has that situation been rectified now?
So in all honesty, no, because of the current system and the knowledge about how to restrict access and deal with that within the current system, the knowledge to do that. In terms of if individuals left again, would we be switching off access immediately? That is not currently sort of something that's high on my priority, because we're moving to the new system, which will, in effect, with the controls within that, supersede that issue. So I can't sit here and say that if someone left now, would they be automatically switched off the existing system? Probably not, because where the focus of our effort is to move into the new system, which will have those controls in around segregation of duties and posting journals.
But right now, it does constitute a risk still.
So there's always an element of risk there that someone who has access to post journals can effectively move money around the accounts. But that is where then other controls come into place in terms of budget monitoring. So when senior managers and indeed the finance staff are reviewing that budget monitoring, they'll be able to see that something doesn't look right here in terms of actuals posted in the accounts. Why is that transaction being moved? So there is a risk in terms of that access, but there is also mitigations in place in terms of the other controls that are being implemented.
Can I just come in from an audit perspective? I mean, given the findings from 15-16 and also 16-17, one of the particular areas which we highlight as a risk, which is why we've tested it, which is why you've got that recommendation, is around journals processing. So we did this in 16-17, i.e. tested a lot, and the intention will be we'll do exactly the same level in 17-18 to be able to give you some assurance around this particular control and how it's working in the current year.
Can I just ask a question over practicalities? You're saying that the audit now runs from January to December, and we're having a complete systems change, hopefully March. How are you going to cope with running an audit on both old system and new system?
Sorry, no, I'm not saying that. I think the 16-17 audit's finished today. The conclusion is today. For 17-18, you'll be in your old system, am I right? So we will still be auditing the 17-18 figures in your old system.
Right.
I don't think the system is up and running until April, so that will be the 18-19 audit year. Sorry, have I got that wrong? Yeah. Sorry.
Jolene, correct me if it's wrong, but the intention is to implement the new system from 1st of March. So there'll be double work because there'll be two systems to audit, because there was two systems. The old system, which was for 11 months of the year, transfer of balances onto the new system. There'll be no doubt testing galore in terms of those balances that transferred into the new system. So there will be dual work because there's two systems effectively in operation this financial year.
Misunderstood the question, Chair. Yes, you're absolutely right. We will be auditing a set of figures that were on a system for 11 months and then testing the transfer of those figures on that last month, and then auditing the system that produces the accounts, which is the system that you have for the last month, when we come back in May and June, hopefully, depending on the timing of the audit this year.
There was a reason why I asked that question. Is there a cost implication for us, the fact that you've got to do two lots of work on that or not?
There may be. No, there may be. To be fair, if we go back to how the fee is organised, it's set by PSAA at the moment. And they set it on the basis of a number of criteria. So, for instance, they set your fee on the Isles of Scilly, say, 10 years ago, when systems were slightly different. So I'm not here to start to suggest that we're going to escalate our costs for the sake of it, but to manage expectations, if we do find some significant problems, like, for instance, we did in the previous year where we've had to charge extra, then we will have to have that discussion. But I won't know that until we come in and start testing.
Councillor Grotty?
I'm just going to make the fairly obvious comment that in businesses, good advice is well worth paying for. And obviously, if we have to incur extra audit costs and get us back onto the straight and narrow, personally, I think most of us would agree, hopefully all of us would agree, that that was worth paying for.
Just to give you some comfort on that particular issue, in terms of us being able to charge you or any other client extra fees and under the public sector, this is a highly controlled area by public sector audit appointments. For instance, Grant Thornton or any other firm can't just come along and issue an invoice. We have to go through a series of processes which includes PSAA reviewing our files and looking to see if what we are suggesting we may indeed charge extra for is legitimate. So just to give you the assurance that even though we are a firm, it doesn't mean we can just issue invoices in the public sector.
Councillor Smith?
Thank you. I'd just like to pick up on a couple of points I think it's quite important to air in public, really. Firstly, on page 22, which we've touched on, the revenue recognition, in the fact that the council needs to recognise and control grant revenues, why that was a problem in the past and how that's going to be rectified. And also, we have to pick up on the fact that there's been a massive overspend and the reasons why that's happened and how it's coming under control. I think it's very important that these are actually aired in public. Thank you.
Do you want to comment on that, Andy?
Yes, so I'll comment on the grant control. So, from my perspective, I think there's a myriad of issues here. The accounting treatment of grants in the past has been mixed, and therefore have officers who have gone out and successfully got the grants, are they fully aware of, has that grant gone onto the balance sheet? In this particular instance, the grant was actually going into the revenue account, which was wrong. So if I extrapolate that out in a year or two's time when they wanted to spend that money, it wouldn't have been there in the balance sheet. And that's part of the reasons why we've got some overspends in the capital programme historically as well, because of that accounting treatment around the grants. So I think for me it's a case of understanding what's in the system, what's in the balance sheet, how that's been accounted for, and it goes back historically. So going forward, it's clearly an area that we need to put controls around, and particularly when it comes into spending within the capital programme, ensuring that that grant is in the balance sheet and is there to be spent. So there are controls that we are putting in place around that, but also we are constantly and still are cleansing the balance sheet around our grants position, and knowing what is actually there, and what the balances still remain. So there's a double-edged sword in terms of making sure that we are having controls in spending going forward, but know what we think we had and accounted for correctly going back some years is actually the correct position. But in 16-17, clearly, and I recognise and accept that it was a material weakness because of the level of grants that we receive as an authority.
Councillor Francis.
Thank you, Chairman. I think whilst we're questioning Geraldine on her report to a degree, and also Andy, I would like to make the points that have been set out by Grant Thornton, that in fact in 2016-17 the Council overspent despite attempts to control spending, and this is further added to the financial challenge faced by the Council. And I would also like to make the point that in 2017-2018 the Council needed to make 609,000 savings with an additional 254. This will be covered through the use of trading accounts and reserves. Clearly this is unsustainable, and meaningful savings need to be made. And I'd like to finish by quoting the comment which says that based on the arrangements in place for 2016-17, we conclude that there are weaknesses in the Council's arrangements for planning finances to support the sustainable delivery of strategic priorities and maintain statutory functions, and planning, organising and developing the workforce effectively to deliver strategic priorities. And my point, Mr. Chairman, is that this is not for us to throw back, in my opinion, to Grant Thornton and to our 1-5 officer, but I think our senior managers of the Council need to focus on how we are controlling our finances. All that Grant Thornton and our 1-5 officer can do is report. Our management of the Council needs to deliver budgets as they are set, and to make sure spending is controlled. Thank you.
Are there any more questions? Do you want to carry on? That's it. Right. We've gone through the audit report then. on agenda item. Sorry. Yeah, we've got the 4 recommendations. I'll take them individually if you wish, or as a whole. It's entirely up to you.
Sorry, Chair. Just the management actions proposed in response, where are those in the actual report? Sorry. Am I missing something, or am I just...
They are... So, page 143 and 144 is the management response to the action plan. So, as you can see, I've set out our response to the recommendations that are contained within Grant Thornton's audit findings report. And some of the things that we've talked about, particularly around grant income, tighter controls, around grant conditions, and how we deal with that in the accounts. And then also about our medium-term financial plan as well, and the work that we've been undertaking in the last couple of months, really, in terms of addressing that. Clearly, though, this is around 16-17, as I said before, and the arrangements weren't in place in 16-17, but it is around that direction of travel that we are trying to improve upon.
Right, we have then, in that case, we've got 4 recommendations on agenda item 4. If you wish, I'll take them all together. Is there a proposal that we accept all 4? Proposed by Councillor Sims, seconded by Councillor Guy. All those in favour? That's unanimous. Thank you very much. Moving on to agenda item 5, the revenue monitoring. Andy.
So thank you, Chair. So this report sets out the revenue budget monitoring position as at the 30th of September. So halfway through, members have been keen to see the position on capital. It's not obviously contained within this report, but we are working on the current position of the capital programme, and we intend to bring a report to the next council later on this month in terms of the capital programme. I'll come on to one aspect in relation to capital programme, which links into some of the issues that we've just talked around, particularly around grants, and why I've adjusted the revenue budget position, which is shown in Appendix 1, detailed on page 148. So, in terms of the overall position, it is largely positive in that we are forecasting an underspend, slight underspend on directorate spending of 18,000. That's the forecast variance to the year. There is a significant underspend to date. However, I would caveat that against the profiling, because that's one area that we need to improve on. What you'll see in the profiling is an equal 12th, which is that's fair enough for salaries. But there are going to be other areas of spend and income which will have different profiles. So some of the reasoning for the variance to date may be as a result of the profiling of the budget as to an indication of where we're going to be at year end. But forecasting forward, senior managers are forecasting a variance of, as I say, a small underspend of 18,000. I then wanted to take you to page 147. And why I have then adjusted that to be a position to be of a 230,000 overspend forecast at the year end. So just as we've been talking about, predominantly some of the reason for the overspend in 16-17 was around spend within the capital programme that had to be financed by revenue. Whether that was because grants had been previously fully utilised, as I say in paragraph 3.3 there, or not accounted for historically, we had to fund 350,000 of revenue to fund capital expenditure in 16-17. That's why I feel it's prudent to allow around £250,000 to be financed from revenue in this current financial year, because those weaknesses are still there within the system. So we're allowing for that overspend to occur in 17-18. That's me being prudent. Monitoring of the capital programme is therefore taking place now, and we will hopefully be in a position to understand if that position is going to materialise or not. And as I say, we'll have an update for you later on this month at the next council. But that would, as I say in the last paragraph 3.6 there on page 147, that would have a detriment effect of reducing the general fund balance down to around 650,000 from the revised 999 that we've just approved in the accounts. What you've also got in Appendix 2, starting in page 149 and going through to page 152, is some commentary from senior managers on the overall position with respect to their areas. That's in an attempt to get more meaningful information to members in terms of the position that is going on within each individual service area. Monitoring, as I've said before, yes, it is caveated in terms of the information out of the system. We are improving on that, and also managers are beginning to get that information, and therefore, as time progresses, the variances and the explanations and the commentary will can only improve on the position that we've had for the last two monitoring reports. Happy to leave it there and take any questions.
Councillor Smith.
Thank you, Andy. Clearly, the information presented is very helpful, and I think this is an improvement on what we've had. I think that's got to be good, important to say. Very encouraging that we are generally controlling spending, and that's certainly to be welcomed. A point of clarification, if I may, on Appendix 2, highlighted certainly under active city and natural resources, we appear to have several vacancies. Now, is that actually contributing to the control of spending in effect? The fact that we have vacancies, therefore we're not spending less on salaries, and if those vacancies are then filled, do we then go over budget again?
So I'll hand over to the senior manager in terms of the commentary, but just in terms of logic, if those vacancies aren't continued and they are filled, then that would indeed bring further pressure to that budget area. But I'll let the senior managers talk around exactly the issues of natural resources and assets.
Can I therefore chip in before the manager does that? On natural resources and assets, I've got on page 150, I've got a couple of comments on that to make. Halfway down the paragraph, it alludes to there's going to be a drop in projected income. I'd like to know why we're getting a drop in projected income on that one. And further on in that paragraph, I would fully support the costs of the asbestos removal being capitalised. Would you like to expand on that, Craig?
Yes, Chairman. Two things really. Firstly, in terms of the vacancies, that's due to a mix of issues around things like maternity leave and not actually having cover. Also, some recruitment issues. So there is some built-in savings through that. But you're absolutely right. They are vacancies at the moment, and of course, if those posts were actually filled or being utilised, then clearly there wouldn't be those savings. In terms of the project work that we've been doing, in terms of the buildings, primarily to facilitate the ICT improvements, and of course you'll note that my report back in December detailed all of those improvements. The works in terms of the asbestos removal were around about £20,000. In addition to that, there's also some other works, including some of the refurbishments work around the removal of the asbestos, and also some of the electrical works to actually facilitate some of the ICT. And in my view, that should actually be capitalised and taken out of the revenue budget. And I think the report, is very clear from the Section 151 officer that the issue with our revenue budgets is there is some conflation with capital expenditure, which obviously we do need to drill into, because that does have clearly an impact on the balance sheet.
Sorry, Craig, you didn't allude to why we're looking at a fall in income from the Porthmelon Enterprise Centre.
Oh, sorry, I didn't hear that question in actual fact. Sorry. In terms of, the projected, in terms of the beginning of the year, we anticipated possibly unrealistically 100% occupancy actually of the Porthmelon PEC. Unfortunately, there are some vacancies in there at the moment, so 2 of the larger units and 2 of the smaller units are currently vacated, not occupied, but we're doing a lot of advertising and marketing, and we do actually have interest, so it is something that we are on top of, and hopefully in the future we can get more income coming in, clearly as there's more interest in occupying that particular building.
Councillor Grotty.
Thank you, Chairman. Yes, I'd also picked up on the wish to capitalise work. In the past, I think we perhaps haven't been robust enough in capitalising areas of expenditure that we could capitalise, and obviously that would be good. But I would also like to ask about the Porthmelon Enterprise Centre. I understand, obviously, Hitachi are working from there, and they obviously are contributing to the income from there. But can I ask who's actually paying for the manager now? Because I understood that when the grant was first to start with, for the first 18 months, the post of Porthmelon Enterprise Manager was actually paid for within the grant. Can I ask who actually pays for it now?
Chairman, once obviously the grant funding actually runs out, then clearly that person actually employed to manage the PEC is actually on the payroll actually of the council itself, so effectively the local authority.
Councillor Williams.
Thank you, Chairman. 2.5 makes reference to the potential for a claim against work at Porthmelon, and I just wondered whether it would be possible in this forum for any update on that to be given to us. And my other point was around, although it's welcome this budget monitoring relates to September, and I was just wondering when it was likely we would see the next month's budget monitoring. Will it be at the next couple of meetings, possibly?
Right. If, in that case, we are moving on to discuss what's going on at the Porthmelon Waste Centre, I'm going to take this meeting into part 3 and exclude the public from it, because there is a lot of confidentiality around that. Is it your wish as members that I take this meeting into part 3, or would you want to defer that discussion to a later date?
We've got a Part 3 report later. Would it be possible to address it as part of that Part 3 report when this is finished?
If you wish, however, if you don't see it as completing the current discussions on this item, I will have to take it into Part 3 now.
Still have questions on this.
So
particular,
what is your wish? Sorry.
Still have questions on this particular part of the report, so I'd rather wait. If
you'd rather wait until we go into part 3 at the end of the discussion rather than take it into part 3 now. In that case, please can I ask you not to refer to that, because there are confidentiality issues around that. Okay? Councillor Francis.
Can I just pick up on Councillor Williams's remark just now, though, with regard to our current budget monitoring? I realise that we are actually considering September's report, but hopefully we can have some comment as to where we stand at the present time. Is that possible or not?
Andy?
I'm just looking up now, actually, to see if I've got the latest position, but if not, I'll be able to circulate something to that to members, because I appreciate this is the September report, halfway through. We are bringing, say, the capital monitoring report, but I'm happy to circulate informally to members the latest position that we've gone through with senior managers, which I think, I'm just checking, was the end of November. So it would, and I'm happy to do that outside of the meeting, so that you're aware of the position.
Okay, Councillor Mumford.
Thank you, Chairman. Could I ask the Senior Manager for our Community Services, at the moment you have an underspend of 139,000 and you're forecasting an overspend of 42,000. Could you explain why? Because this is a big difference.
Okay, so this is absolutely to do with profiling, because obviously the majority of our grant payments go to the school, and so it's where the academic year runs as opposed to our financial year. So from September, that's when we start putting in money, which is obviously, this report gets you to the end of September. The overspend relates to the fact that we have a member of staff on sick leave, so we've had to employ a locum social work manager, which was discussed with the lead member for children and the vice chairman of council at the time. We need to have that resource in place to fulfil lots of statutory duties. So, but we are trying to minimise the impact of that through in-year efficiency savings. So I hope at the next, when we look at the latest set of budget monitoring, to be able to tell you exactly where we'll end up. I thought I'd give you worst case scenario at this stage.
Okay, Councillor Sims.
Question for Andy. Referring back to your comments about the adjustment on page 147, and the prudency, is this a contingency, this £250,000 contingency, is it contingency because in case it goes wrong, or is it a contingency because you think it will go wrong? I mean, I didn't quite get it. And the other question I have relating to this, I assume and hope that in future years the new system will stop this from happening. I'm very well aware of the situations with grants and everything.
So yeah, okay, so based on what I know historically, what has happened, and I'll reference it in fact in 16-17 we overspent by 350 in terms of revenue. So it's me prudent in thinking in case it happens again. Do I think it will happen again? Well, history tends to predict and what may happen, and so I am being prudent in thinking the worst may happen. I don't know until we've done the capital monitoring what the actual position does look like. And so what I'm saying is this is being prudent for the worst case position to allow for something that's happened previously that may repeat itself.
So it's somewhere between the two. It's in case and it may well. Okay, thank you.
Okay. Councillor Grottick.
Thank you, Chairman. Sorry, we seem to be bouncing around a bit. So if I could just ask two questions, but first of all, to go back to fire and rescue at the top of page 151, could I ask Craig to give us a bit more detail about where he anticipates the savings that he's going to make elsewhere to identify the budget pressure that he also identifies in that same paragraph?
Yes, Chairman, the budget pressure actually relates to the service level agreement with the airport and the fire and rescue service. So in many respects, it's recycling money back into the council. So it's the £27,000 of income that should be paid to the airport for the work, the recognition of the work that the duty crew do in terms of the local authority fire and rescue services. There's mutual benefit. In terms of the savings, there's no specific savings as such, but what we've seen in terms of the profile this year is that, and because it's a retained fire service, it's actually sometimes very difficult to actually give a very precise budget definition at the beginning of the year, because clearly, as we're a retained unit, most of the payments are in terms of the salaries because it's effectively pay as you go. So if they're called out more, then clearly there are more costs. If they're doing more training, then clearly there are more costs. But on the basis of the profile budget at the moment, it does look like there'll be an underspend both in terms of salaries, and that's in part because of the call-outs, the training, and also, again, some recruitment issues and some vacancies, which actually have been filled, but also in terms of some of the maintenance and repair of vehicles, kit and equipment, and also the replacement of some of the kit and equipment. So it's very difficult to be precise in terms of where the savings have been, but it's actually across the board in terms of fire and rescue service for this year. But the one caveat I would say is always moving into the winter months, the cost pressures do start to escalate, not necessarily because of the number of call-outs, but because we do more training during the winter months. So that's something I will be mindful of as we move forward to the end of the financial year.
I'd just like to add a little bit to that, is that I suspect most of you are aware that within the rate support grant, we don't get enough money from central government to finance our fire and rescue service at all. There is a notional amount within that rate support grant of about £25,000. Its actual cost to the revenue streams of the council is nearer £450,000. To that extent, we, as in myself and Tone and Craig in particular, are in discussions with central government to try and put that situation right. I can't allude to whether we're likely to or not at the moment because the discussions are still ongoing, but we are making best efforts to try and correct that situation.
And Chairman, if I could just add to that as well, what we are looking to do with the Home Office is access potentially some transformational funding as well in terms of some of the capital replacement, because one of the other issues in terms of the fire and rescue budget is that there are probably some spending in there which should be capitalised as opposed to revenue.
Okay, Councillor Davis.
Well, thank you, Mr. Chairman. Just a small point, and I may be nitpicking on this one. On Appendix 2, I'm a little bit confused under democratic and corporate governance. It says there's been an overspend, admittedly small and obviously very small compared with our other problems, in the members' expenses. It refers to additional members. I'm not quite sure who the additional members are. As I understand it, this report covers 6 months, during which, after the first month, members were reduced to 16. So I just find it difficult to understand why we're overspent on travel and subsistence if there are less members. Would I be right in thinking that the budget was reduced at the end of May when the new council was formed? Or is... as I say, I'm just a little bit confused. Thank you.
I'll answer that. Thank you very much, Councillor Davis. It's indeed a very, very small point, and additional members doesn't mean an additional member. It means the additional further cost of travel and subsistence than budgeted for. It's a subline in the overarching budget, and so therefore there is no issue to be concerned about in terms of the actual budget monitoring. Clearly what it does help to do is to provide more detailed and more accurate figures for the years going forward in terms of the real cost. We underestimated the cost of travel and subsistence.
I have asked Andy to send me figures as far as that is concerned, and they will be forthcoming, and what's more, I will circulate all of those to members when I get them. Councillor Grottick.
Thank you. Just to finish as a sort of comment to Councillor Davis's question, I'm puzzled as well because at the moment our lead members are not actually in receipt of any extra remuneration for their responsibilities. So I do find it quite puzzling, and I shall look forward to the further detail. Can I go back to Park House on the bottom of page 151 and ask Aisling if she'd like to give us any further comment regarding the first comment that the income from client contributions requires further analysis. I would just say I'm aware that at the moment there's a lot of work going on with regard to possible income generation at Park House. So I thought you might like to comment on that.
Well, okay, I mean, I think one of the major reasons why last year's budget was overspent was that the Section 151 manager at the time felt that we could generate quite a lot of income through Park House, which was totally unrealistic because we're talking about older people, and it can vary very much about how many people are going to be in Park House and the level of self-funding that they can provide. So last year's budget was more realistic. We looked over the last 10 years, the likely levels of income and the likely levels of self-funding, and we set it at about 135 from clients and about 50 or so from the NHS for continuing healthcare. Actually, in reality, what's happened is that we have 6 clients and a different level of self-funding. So that will have an impact. Now, that's a really tricky one because obviously, as Director of Adult Social Services, I can't go out and find you customers that are going to be fully self-funding. That wouldn't be ethical or in the spirit of all the legislation. Also, we have got a couple of clients receiving continuing healthcare funding from the NHS, but that's recently ceased. So those kind of fluctuations, that's always the pitfalls with small budgets. So when I set budget next year, I will have that discussion with you about setting a very realistic level of income. However, we have Even though we had to front load the budget significantly at the beginning of the year in order to keep Park House open and put in a significant amount of locum management staff, in year we were achieving quite a lot of efficiencies through a huge whole-scale review of rotas and so on. We are also looking for additional income opportunities, so we have absolutely stepped up provision of daycare services and respite, and also looking further afield to see if we can support the health and social care system in Cornwall by bringing people who've got delayed transfers of care in the acute sector to Scilly for short periods of time to generate income. There has also been issues around income recovery. As you know, we've had a whole change in our team, both in Park House and in the adult social care team. We have an electronic care record system which generates all the billing processes called ASEAS, and I think the understanding of how that system worked, we lost that. Now that we've got budget monitoring in place on a regular basis, I was able to therefore pick that up. So we're addressing some of the kind of slowness in billing efficiently. So we're all over that. So a mixture between all those measures, I feel confident that we will live within the budget, but I think it will reflect next year what I present to you about how I think we can create a sustainable service moving forward. But significant work has taken place on staffing to create a service which is safe but also robust. And I think it's been one of the achievements of this year is how we've turned Park House around, actually. I think we've got something that we can build on for the future.
Councillor Marcus.
Yeah, just to go over Appendix 2, there's a lot of in-year vacancies. That seems to be a theme across the whole organisation, and 5 mentions of it within the report here. It's kind of a double-edged sword. We set strategic goals for officers to deliver. If they haven't got the staff to deliver those goals, then why have we got the vacancy there? So is that money we can save? Do we need to have that staff member there? It's just slightly confusing and seems to be adds to an air of uncertainty and anticipation, which doesn't give me as a member much assurance that things are managed well, to be honest. So and the language used in some of this here, they fully anticipate, a service has decided to report a balanced income, balanced outturn. The words, the language isn't exactly the most confident of languages.
Shall I respond to that? Thanks for that question. Members will recall that when the budget was set, there was quite a large amount was allocated to save through budget or vacancy management. What was agreed at the time was that we would consider every vacancy that occurred within the senior leadership team, whether that had to be filled as a straightforward vacancy, or whether we could delay filling the vacancy in order to provide further savings, in-year savings going forward. And that process is currently in place. So every vacancy will be reviewed. In addition, we have also experienced I think significant difficulties in actually recruiting for a certain post. So that has meant that either there have been delays in filling those posts, or some posts we have not been able to fill. And that's how the senior team has been managing the savings around vacancy management. So there's not a moratorium, but very careful consideration for each vacancy going forward.
Yeah, I understand that. But going forward, is that going to be something that is looked at in terms of service delivery? Because either we need to have the people in post, which will add more pressure to the budget, or we don't, and we don't do certain things, I guess.
Well, my view is, of course, it's always driven by the plans and policies that members put in place, and then what officers put in place in the structure to deliver those plans going forward, and do this in an effective way going forward. And so you create your structure following the functions and services. Yeah.
Councillor Williams, did you want to?
Yes, it's a slight tangent. It would have been more appropriate perhaps after the Park House comments, but I was just well aware that members of the Park House staff, the community, voluntary sector went above and beyond over the Christmas period to help parts of our community. So I thought it might be appreciative if our thanks could be passed on to those people who made those
I
efforts.
fully endorse that, and I think the whole of the elected membership and officers of council would fully endorse that. And on top of that as well, there is another one, is that we're all aware of the weather problems that we had over Christmas. So I would like to pass our thanks on to the airport staff and the providers of jet boat services as well for getting everybody in place as and when they wanted to be or where they needed to be over the Christmas period. Obviously the weather's not within our control, but there were monumental efforts made to get people where they needed to be. And I think we all appreciate that. Are there any more comments? Councillor Smith?
Thank you, Chair. I think, reading this report, my overall assessment is that, the picture is better, clearly, and that is a good thing. But given those comments around vacancies, that, you could interpret that as something of a false saving because those posts aren't filled. We've got this capital overspend, so we are still projected to overspend. Let's be very clear about that. And going forward, that's not acceptable, is it? And of course, we've taken a knock to the general fund balance. We should be looking at, raising the general fund balance. It's not just about cutting the budget, which we've got a huge pressure to do so in the end of February, but we've also got to look at how we get that general fund balance back up. And I think, if I took this approach in my business, I'd be bankrupt. Let's be very clear about this. And the same can be said of the previous year. So how do we stop this? How do we move forward? How do we turn this around? Because we simply cannot go on like this, can we? And I do want to recognise the important work that has gone on. I appreciate that, but we are where we are, which is still in an unhealthy position, frankly.
Andy, do you want to comment on that?
I think taking the positive, the Directorate's spend on the budget that was set is forecast to be underspent. The capital is me being prudent. It hasn't arisen yet. It's an unknown quantity, and it's me looking at what's happened previously, thinking with the controls in place around our grants that has been highlighted as a weakness, there is a reality that might come again this financial year. So it would be remiss of me to report an underspend, and then when we get to the year end, we report an overspend because potentially of this. So as with Councillor Sims, I'm saying it's an in case, but I think it might happen, and therefore I'm being prudent around it. But if we get that control measure around our grants in place, that will negate this happening again. That's clear. We've got to do that and get that sorted. The system will help us do that, but also the controls in place that we put in around when we're committing capital expenditure, ensuring that the grant is there. There's been an occasion where we were going to undertake capital expenditure, and I haven't seen the evidence that the grant is in place, and we've not gone down that route. So those controls are coming into place and into force. So it is positive around the service spend. I mean, one thing on the vacancy and establishment issues, I don't think it's significant in terms of the overall position for the authority, but just with the improvement in budget monitoring, along comes about is the improvement and control of budgeted establishment costs. So yes, you've got to remember when we set this budget, it was the first time we set it from a clean sheet of paper, and we're working on the information that was available at the time. So that is a continual improvement. Part of that will be the understanding and control of the budgeted establishment costs, and that is happening now. And it may well be that these vacancies can be captured as a saving, because they are an assessment from the senior managers that they aren't necessarily needed in the establishment. But the senior managers will have to make that judgment and that assessment. And we have to, again, go back to a point in time when this budget was set based on the information, and we're now beginning to go on that cycle to cleanse that information and understand exactly where we are. So that will improve going forward. If it wasn't for the capital issue that I've highlighted, then this council would be heading for a balanced budget. So that's positive. However, and we'll go on to probably talk about that in a bit more, is that we are still drawing down on traded accounts and reserves to balance that position. So there is still a gap going forward that we do have to address. So the positives are there, and that comes off the back of the audit report. But there's still a long way to go, and there's still a lot more work to be undertaken and understanding of our costs, particularly around staffing, which is the majority of our costs.
Thank you, Andy. I'd just like to bring members back again and emphasise the fact that this budget monitoring report is as at 30th of September. We've moved on a pace since then, and there will be the information, as Andy said, he will circulate it as soon as possible. So just keep that in mind, please. Are there any more questions? In that case, I'd like to move on and ask for a recommendation that the Council notes the revenue budget. Is there a proposal? Proposed by Councillor Grottick, seconded by Councillor Sims. All those in favour? Thank you, that's unanimous. That takes us on to section Part 2 reports, which there are none. I will therefore move into Part 3, that under section 100 brackets... Sorry? Yeah, hang on. Hang on, we haven't finished yet. We're going to part 3. All right. I'm only excluding the public. Under section 100A(4) of the Local Government Act 1972, the public be excluded from the meeting for the following items of business on the grounds that it involves the likely disclosure of exempt information as defined in paragraph 1, part 1 of Schedule 12A, that the Act as amended being information about individuals or of a confidential nature. Right.
We need a proposal.
Sorry? Can I have a proposal for that? Proposed by Councillor Grottick, seconded by Councillor Sims. All those in favour? That's unanimous. Thank you.